first time, I think, in many days, right at the word go, market breadth is negative. So we've got more, it's almost 2:1 in favor of declines. It's too early in the day to make any conclusions based off it. But the fact is that, declines to advances is 2:1 right as we start. A bunch of other names. Piramal Enterprises is down 8%. Numbers were, of course, a disappointment. This is the financial services arm. After, of course, the pharma business got listed separately. Ramco, which sold off aggressively yesterday, is down another 9%. So 640 on Ramco. Balrampur Chini, and you'll hear from the management in a bit from now on the channel, that is starting about, it's actually flat. It started low, but I think it's picked up from there. Gujarat Alkali is down about 7%, 828 on Gujarat Alkali. And there is Aurobindo Pharma, which is starting down about 2%. We'll get to this stock. There's some news flow around this, but more in a bit. 531. Prince Pipe, again, not sort of a recent listing, but not been around that long as well. But 7.5% lower on Prince Pipe on decent-sized volumes. Oberoi Realty, Godrej Property sold off yesterday. Oberoi Realty is down about 5% as well. So that's actually a lot happening on the downside, apart from, of course, Tata Motors, etc., which we've already highlighted. On the upside, Lupin is up a full 7%. We highlighted, started higher, it's staying there. And Narayana Hrudayalaya is the other one, which has got a big pop of 7%. Again, reacting to numbers, Ekta said, the numbers were pretty decent so from that one. So that's the broader lay of the land. As I said, market breadth, more losers than gainers. But that gap is already starting to close. The Nifty is down about 95 odd points. Our market master of the day is Manishi Raychaudhuri. He's Asian equity strategist, equity cash Asia Pacific at BNP Paribas, and he's right here with us in the studio. So Manishi, great to have you with us here. Thank you very much.
Of course. It's an amazing feeling. I'm back in India after almost 3 years.
Oh, wow.
3 years, yes.
Wow.
Truly.
How are you feeling?
This not being able to come back, it feels like getting locked out from your own home.
Yes.
And that's why it's such an amazing feeling to be back here.
And glad that you could make it to the studios as well. And I hope that this is the first of many trips home. Manishi, how are things looking to you? And let's just start with earnings, because we are getting to the close of this particular earnings season. Are earnings momentum fading out a little bit? Is that a sense you get?
I think, the Indian earnings season, from what I gather, has been a mixed affair. You had pretty decent numbers from some of the private sector banks early on, a couple of the top-rung IT service companies as well. But then, when you come down to the second tier, there has been a few disappointments, and possibly more importantly, you have had some disappointing guidance as well, about the fourth quarter and about the rest of the year. So, and actually, it's not too different from what you hear in the rest of the region, possibly marginally better, I would say, compared to what you hear in North Asia in particular. The markets like Korea or Taiwan, which are export-heavy, tech hardware-heavy, there the stock collapse has actually been driven by earnings collapse, which actually came earlier. The earnings estimate declines in those markets have been in the region of about 18 to 23%, if you look at the last 1 year. For India, it's been in the range of 6 to 8%, which is not such bad news in the context of the world that we are living in.
Okay, well, I just want to mention a couple of stocks. Cipla is actually gaining a bit of ground right now. It's one of the big movers at the moment. Volumes are also picking up over there, about 1.5 to 2% higher on Cipla. And some more stocks that are actually bucking the trend this morning. Lupin is really a big mover now, 8% higher on Lupin. So don't lose sight of that. Big volumes on Lupin as well. Narayana Health is up about 6 odd %, and Nykaa making a bit of a comeback, up about 4 odd % there. Manishi, good to have you back. And how different is it now in India compared to what you're seeing globally? Because there's clearly a global turmoil, whichever part of the world you look at. And India has been standing tall. But what do you see as the pockets of outperformance?
India is, in a sense, a stable island in a stormy sea. You have these severe earnings downgrades in the rest of the world, and particularly in the, the relatively developed part of Asia, North Asia. India's advantage, and these are nothing new, it's the largely domestic economy. It's not so linked to the kind of demand retrenchment that we are seeing in the developed markets, except possibly the concern that's engulfing the IT service sector at this point of time. And, of course, unlike many other large markets in Asia, there has not been any policy headwind to the private sector businesses. and I'm referring to China here. So when one puts all this together, the conclusion is that India is relatively safe compared to, and that's getting reflected in the share price performances. I have a chart hidden somewhere. You can plot it if you have a Bloomberg terminal. You just plot MSCI India, MSCI China, denominated in US dollars right from GFC. These two markets used to move in lockstep, Investors had very little to choose between them. But from early 2021, China collapsed. India has been relatively stable during that period. And this would be true if you plot India against, let's say, MSCI Asia ex Japan as well. So this has actually been the story of India. Simultaneously, we have seen the benchmark weight of India in MSCI Asia ex Japan go from 10% to about 18 to 19% over the past 2 years. That forces the long-only real money investors to allocate more and more to that market.
Well, Manishi, on the headline index itself, as you said, we've been a big outperformer. Valuation-wise, we're not cheap any longer.
Right.
Do you think we're set for a time-wise correction?
Right.
Or you're not, and will you rule out a price-wise correction? If there is a price-wise correction, how low can we go according to you?
Let me dwell on this, this point of valuation that you made, because this is important and it comes up repeatedly in our discussions. If you look at price to earnings, 12-month forward price to earnings of India, MSCI India, let's say, or one-year price to book, these are actually not really egregiously expensive today. One-year forward price to book is a little more than 3 times. Price earnings is possibly about 19 to 19.5. The last 25 years average P multiple was about 18.5. I think the price to book multiple was about 2.75 or so. So these are slightly higher than average, maybe slightly less than 1 standard deviation below. What looks egregious is actually the relative valuation. If you plot India relative to MSCI Asia ex Japan, it's more than 2 standard deviations higher.
Right.
And that's a consequence of the rest of Asia, particularly the large North Asian markets, being pulled down. So look at some of the other banks, private sector banks, which used to trade at 4 times price to book. They're currently about 2.7, 2.8 or so. So I think, the point that you make about time correction, that might happen, especially if we see a turnaround in North Asia, if we see China outperforming, for example. As far as a real price correction is concerned, well, it's difficult to draw a conclusion about the short term. It might happen because outflows from emerging markets are still continuing and likely to continue, at least till the first quarter. But it may not be severe.
Valuations by themselves have really never caused a big correction, price damage in that sense. Right? You need a trigger, you need something to change at the margin.
Absolutely.
And what has helped here massively is this constant, steady stream of domestic inflow.
Right.
14,000 crores in SIPs.
Yep.
And I think 8-9 months back, there used to be 7,000-8,000 crores, right?
Right.
And that is staying steady for now. So irrespective of what happens, and I think this is a point which has made people sort of sit up and take notice.
Right.
Whatever you throw, but you got this constant stream of domestic inflow.
True.
The market stays where it is.
Yeah. In fact, very valid point you make there. Think of the period from October 2021 to about July 22. 33.4 billion US dollars were drawn out, taken out of India. The market still stayed relatively stable. And that was, it's basically the domestic flows that were bulwark against those FI outflows. Why did this happen? Not only because there was no alternative investment avenue at that point of time, the interest rates were low, but also because the retail investor is gradually coming back into an asset class into which they had not invested for many years. And, in the RBI annual report, this data comes. If you look at the household financial investments, go back to the early to mid-90s. Householders used to invest about 15 to 20% of their financial savings those days into equities. It came down to 0 by the early 2000s. Today, it's at about 5, 6, 7%. If we think of those earlier days, it still has the potential to triple from the present levels. And think of the quantum that we're talking about.
In terms of individual sectors, right, one thing that we're noticing is that a lot of companies that have global exposure continue to be under pressure. So we were talking to Galaxy Surfactants, they've sort of cut down their guidance.
Right.
Jaguar Land Rover, Tata Motors has cut their guidance. So what do you do here? Do you, is it prudent to keep away from these global facing companies, especially in the auto ancillary sector, or do you look for opportunities to buy?
Right. Now, that's, it's something that we debate ourselves, and we have actually taken the course of action in the India silo of our model portfolio to move slightly away from those global linkages for now. And we are clearly focusing more on the domestic part of the portfolio. So you mentioned some of the auto ancillaries. There again, we do have auto companies, but these are clearly the domestic champions, the four-wheeler market leaders who have pricing power and huge distributions, etc. When you talk about global linkages, one sector that obviously comes to mind is IT. And as we know that there has been a degree of sort of investor pessimism about that. But here again, if you look at the order flows, they have been strong and long duration orders have been coming through, which gives some kind of a revenue visibility to the top rung frontline companies.
All right, Manishi, we'll leave it there. Thank you very much. Great that you could drop by to our studios. And as I said earlier, I hope this is the first of many visits back home to India.
I hope so too.
Thank you very much.
Are you here for?
I'm here for about 10 days or so. I'm finally flying back to Hong Kong on 21st night.
Okay.
You know, we have a few events, you know, in our bank.
And it has been pretty severe in Hong Kong, right, over the last many years in terms of COVID restrictions.
True. And, you know, those restrictions still continue even though they have been eased a bit. And that's why people like us, we are now able to, there's no quarantine. But there's still that self-monitoring. We have to test ourselves every day, load that test report on a website. We have to do that when we get back. So.
Okay. All right, Manishi, good to have you in the studio and
Right.
have a pleasant stay here in India. Wishing you well.
Thank you.
All right.
Thank you very much.
Well, let's get to our next corporate then that's joining us, Balrampur Chini. Well, the numbers were a little bit weakish owing to the sugar segment. That's what led the losses in the past quarter. You know, to understand what's going on out there and what's the outlook from a year on, we're joined by Mr. Pramod Patwari, the CFO of the company. Hi, sir. Morning. Thanks so much for joining in. Well, you know, let's focus on the sugar segment